we're seeing very substantial inflation. It's very interesting. I mean, we're raising prices. People are raising prices to us, and it's being accepted. Take home building. I mean, the cost of, we've got 9 home builders, and in addition to our manufactured housing thing, and then operation, which is the largest in the country. So we really do a lot of housing. The costs are just up. Steel costs, just every day, they're going up, and there hasn't yet been, because the wage stuff follows. I mean, if the UAW writes a 3-year contract, we got a 3-year contract. But if you're buying steel at General Motors or someplace, you're paying more every day. It's an economy really. It's red hot. I mean, and we weren't expecting it. I mean, all our companies, when they thought when they were allowed to go back to work, at our various operations, we closed the furniture stores. I mentioned, they were closed for 6 weeks or so on average, and they didn't know what was going to happen when they open up, and they can't stop people from buying things. And we can't deliver them. And they say, well, that's okay, because nobody else can deliver them either. And we'll wait for 3 months or something of the sort. But the backlog grows. And then we thought it would end when the $600 payments ended. And I think, around August of last year, it just kept going. And it keeps going, and it keeps going, and it keeps going. And I get the figures every week. I call, or Bumpkin calls me, and we go over day by day what happened at 3 different stores in Chicago and Kansas City and Dallas. And it just won't stop. People have money in their pocket, and they pay the higher prices. And when carpet prices go up in a month or two, we announced a price increase for April. For our costs are going up. Supply chains all screwed up, for all kinds of people. But it's almost a buying frenzy, except certain areas you can't buy yet. You really can't buy international air travel, and so the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in their pocket except for. Meanwhile, it's a terrible situation for a percentage of the people.
With that said, we'll be looking at 3 ETFs that will help you diversify away from just owning stocks. Okay, now the first on the list will be the GLD, which is the Spider Gold Trust ETF. Now, it's no news that there are inflation fears all around, and gold has come in as one of the commodities that are in focus. However, on this channel, we talk about having a long-term perspective to things, and that's why we do what we do here. So in the last 1 year, this ETF has returned 15.49%. The 5-year performance stands at 56.31%, while over 10 years, it's a 10.42% return. The ETF has 64.25 billion under management and has an expense ratio of 0.4%. So basically, guys, this is an active ETF that tries to mirror the gold bullion prices rather than investing in gold mining stocks. You very well know that on this channel, we focus more on ETFs than individual stock picking, because I personally believe that over the long term, with a well-diversified ETF portfolio, you should do quite well. One major point to note is this, guys. The ETF is up about 4% this year, compared with a double-digit decline for most stocks. So in an environment like this, in a regime like this, when stocks tend to be very volatile, gold comes in handy as one inflation hedge. Now, the second ETF I want to discuss in this video is ticker SLV, the iShares Silver Trust ETF. Again, this is inferior to the gold ETF, but I believe it's worthy of mention on this channel at this time. Check this out. Businesses use silver in everything from electronics to specialty chemicals, giving it a more utilitarian footprint than gold, which largely sees demand from investors for luxury goods like jewelry. So yes, again, the demand for silver is not like gold. Gold is definitely the number one, but silver follows closely behind. Now, I must caution you on this ETF in particular. Over the last 1 year, the return is basically flat. Over the last 5 years, it's at 39.22%. The ETF has actually lost over the last 10 years at 29.98% loss. So this should be basically on your watch list to keep tracking it, especially if you're interested in gaining an exposure to silver. Now, it's a smaller ETF at 13.97 billion assets under management and an expense ratio of 0.5%, which is higher than what we saw with the gold ETF. So that's why the gold comes in as my number 1 pick at this time, while the silver trails behind as number 2. The third ETF I would like to bring to your attention at this time is ticker VNQ, which is an exposure to the real estate market. This is the Vanguard Real Estate ETF. Now, this is one very interesting ETF. In the last 1 year, it's returned a 22.49% gain, while over the last 5 years, we've seen a 24.97% gain, and 10-year return is at a whopping 71.76%. But this is where the catch is, guys. Assets of 39.72 billion shows that it's quite liquid, and it pays a dividend yield of 2.82%. Now, to make it even more juicy, check out the expense ratio at 0.12%. All right. Now, looking at the holding breakdown of this ETF, we will see that real estate accounts for the bulk of this ETF because, again, that's exactly what it is. It's a Vanguard, it's a real estate ETF. And names, guys, like American Tower, different kinds of REITs are in this ETF, Crown Castle International Corporation, Simon Property Group, Public Storage. You see a varied group of REITs in this particular ETF. Now, one major reason why I included this in the list for today is because the real estate market could be risky if you're going into one particular area. Say, for example, you're going to residential, that could be risky. But when you have an ETF that spreads its assets over different categories of real estate assets, then that looks more interesting because of the diversification benefits. The ETF is one of the largest and most popular real estate funds out there. Its portfolio contains a wide variety of different real estate operators, including some of the names I mentioned earlier. So by and large, this ETF is one interesting way you could expose yourself to the real estate market. Now, bear in mind that this is definitely not financial advice. I'm just sharing my personal opinions and what I am personally doing with my own investments. Wrapping up, to go away from stocks completely is not my strategy. However, I like to include other asset classes just to provide that diversification benefit. And in this instance right now, gold is quite interesting to me. Silver is also coming in as an interesting one, even though not as interesting as gold. And real estate is definitely one area I am considering at this time. So let me know in the comment section, what other asset classes are you looking at this time? What other ETFs are you exploring at this time? Do leave a comment so I can know exactly what you're thinking and we can all learn from each other. With that said, just a friendly reminder again, if you haven't done so already and you gained any value whatsoever, do hit the like button and subscribe to the channel for more content like this, especially relating to safer investments compared to individual stock picking. With that said, thank you so much for watching. Thank you for stopping by, and I'll see you all again in the very next video, which should come up shortly. Have a good day and invest safely.